What is going on, my friends? Happy Friday. Derrick Evans here, NMLS 155010. A lot to talk about today, a lot of things to rant about today as we're starting to see some things unveiled. A couple stories I'm not going to bring up today, but I will dive into, obviously, mortgage rates real quick, just to let you know what's going on there. We've got lots of really good action here. As we say, we stay in this corridor. The Federal Reserve is doing a great job buying bonds when needed and keeping this in a night. It almost seems like it's tightening up a little bit here, which is great. If we tighten up into a smaller channel, that's even better. Of course, it'll break out one way or the other, hopefully to the high side, and rates will make all-time lows. I do think that it's totally possible that we could see new all-time lows in mortgage rates before the end of the year. It is totally possible if we can get the federal government to stop screwing things up. So when the Federal Reserve initially bought mortgage bonds, they bought too many. They completely blew out the hedge of every mortgage bank that was hedging their locks. That caused a lot of problems, which caused higher rates because the banks make up for losses by increasing their rates. Also, recently, this bailout that for Fannie and Freddie, which is really being pushed by FHFA, is not a bailout at all. It's actually it's one of the most horrible things I've ever seen. They're literally saying, hey, if I'm as an originator, if I originate a loan that then goes into forbearance on the first payment, they're going to charge my bank 500 to 700 basis points for that loan, which means not only will my branch get nailed for it, but also I'll have to return the commission that I earned on it. That is a big problem because about 6.5% of mortgages are in forbearance right now. A lot of people are doing, even though it's a terrible deal, it's completely ill-advised. Some people have no choice. Some people think, well, this is a smart thing to do. Let me just go ahead and do it. They're going to hook me up anyway, or I'm going to refinance down the road, whatever. It's causing problems still. So if we could just shake out all of the things that the government has done to screw up the mortgage industry, we'll be great. That's probably rant number one. All right, let's look at a couple other things here. So one of the things that's really driving me crazy is watching what happens with the big banks and ultimately what they do whenever there's a crisis. Every time there's a crisis, particularly a financial crisis, the big banks profit in major ways, and it drives me freaking nuts. This particular story is on NPR, and it talks about how the small business rescue, the PPP loans and the stuff that were going on, how much money the banks have earned. And if you dig into this, you learn, and I actually talked to someone at Chase, by the way. Maybe I wasn't supposed to say that, but I did. And they said that the banks were taking, as is quoted here in this article, that the banks were taking 5%. 5% in fees. Now it says over here 1 to 5%, but on the smaller loans, so under 350, they were getting 5%, and on the ones that were higher, they supposedly got, 2 to 10 million, they got 1%. They use an example in this story to show you how the small business loan that went to Ruth's Chris, was originated by Chase, and they made $100,000 on this to originate this fee. It was a one-time transaction. It assumed no risk to take on this transaction, zero risk. And there were fewer requirements than a regular loan for them to execute it. So this is the kind of stuff that drives me absolutely nuts. Not only is the Federal Reserve making the overnight lending window practically 0% for the banks to get free money to go lend out, but now on the bailout, this is supposed to be a bailout. This is actually supposed to be a small business bailout. These loans, and the banks are making 5 points, which is literally the maximum you can make on like a mortgage loan, for example. The maximum total amount that someone could be charged is 5%. Otherwise, it's illegal. And they're doing this on these small business loans. I mean, can you believe this? So ridiculous. So anyway, there's that one. Here's some other information that I thought would be interesting to take a look at. So what we've got here is, and I thought, I've been waiting for information on this. So we see some mortgage delinquencies starting to tick up. Now, in most cases, March is a very low mortgage delinquency month. In fact, it's one of the lowest months cyclically that we see mortgage delinquencies. We saw mortgage delinquencies edge up here. Okay, it's the first ever March increase ever. And so this is the thing that is the most important thing for us to pay attention to, is what is going on with the foreclosures. Any of the high balance pricing issues that you're seeing right now in mortgages are completely a result of concern around foreclosure. What is the reality behind this? When are we going to know what's going on? However, even though delinquencies, meaning late payments, and by the way, they very well may be counting people who are involved in the forbearance situation. In fact, it says right here, note, for the purpose of this report going forward, millions of homeowners who have entered the forbearance will be counted as past due, but should not be reported as such to the credit bureau. So if you enter forbearance, they cannot report you late to the credit bureaus, but they will be counting those as delinquencies for these reports. So we have to keep that in mind as we're looking at this stuff. But the other thing that was good to see was that foreclosures and serious delinquencies hit record lows. Okay, that's what I'm really looking for. This is the information that I want to see. And by the way, this is just a Yahoo Finance article that came from PR Newswire. But, foreclosures and serious delinquencies are at record lows. That is good. Now, we still, this data lags a little bit, so we need a little bit more time to kind of see where this is at. But that's a great place to be at right here. If we are going to get a tick up, it's great to be at an all-time low position moving forward. Okay, a couple other things. Let's clear that out. This one is from a completely different site that I don't really use too often for news, but it was something that was worth paying attention to because we looked and we saw, okay, hey, mortgage delinquencies ticked up, but the overall foreclosures dropped down. This is also a really good indicator for the economy because what you see a lot of times when things start to get bad economically is that you start to see a lot of auto defaults. In this case, we see auto defaults drop to lowest reading in 10 years. We have to go back about 12 years when the collapse began, and it took several years to get out of it. So we're seeing the lowest reading for auto defaults in 10 years, which is a tremendous sign, in my opinion, because this is one of the things that we want to track. There's a difference between different kinds of payments, like student loan payments, for example, which I was going to do a story on. I'm not going to read it. I need more information. Car payments, credit card payments. Which one are you most likely to not pay first? Well, the car payment is the one that you're most likely to pay. It's surveyed. It's been done a million times over the years. People will pay their car loan most of the time first because they believe that they have to have their car. People will actually pay that before they pay their rent or their mortgage in a lot of cases, which is interesting, I know, but this is data that's been around forever. Now, if people are going to pay that first, then if we start to see people not paying their auto loans, that's going to be a really bad sign, right? Well, right now, that's not what we're seeing. So that I would consider to be a good sign at this point in time, which is good. We need all the good news we can get, right? So this is a terribly boring website, but I did want to make people aware that you can start to expect to see stuff like this. The whole coronavirus situation with, we're already having to have people sign disclosure after disclosure, new forms, things like that to get loans done that you've never seen before. Expect changes to the Fair Credit Reporting Act, maybe to even the Fair Debt Collection Practices Act. There's going to be sweeping changes probably across all these different legislations based on what's happened here. A whole bunch of things are going to change, maybe forever, based on what has taken place here with the whole coronavirus situation. Okay, I got one more, and this one is really important to me. For those of you who know me back in the radio days, I went through a bankruptcy personally about 10 years ago. Lots of reasons for it. In the process of doing that, going and doing a Chapter 7 bankruptcy, what I realized was that it's not a super complicated thing to do. It can really get you out of a jam. Please, pretty please, do not let anyone you know suffer because of debt. The laws of this land have been set up in such a way that you do not have to suffer because of debt, whether it's medical bills, whether it's credit cards. If you know someone who's gotten into a bad situation, and by the way, I posted earlier today, if you know a veteran or active duty military family that is having financial hardship, please let me know. We have set aside some funds to help some people very simply and easily. No cameras. We don't need documented. We don't need any credit for anything. Just want to know who needs help out there. Please let us know. And if someone is drowning in debt, someone's good, tell them to take a look at a Chapter 7 bankruptcy. Get a Chapter 7 bankruptcy consultation. It is a very easy thing. It is not anything what people may have made it seem to be. Are you put in credit jail for certain things? You are. For a while. You are. But your credit scores will go up. You can still borrow. You can still do a lot of the things that you need. You can buy a house within 2 years. You can get rid of all of your debt. Get rid of all of it, just like that. for like $1,500. Your debt's gone. Yeah, you have a Chapter 7 bankruptcy on your credit, but would it make you feel better? Would it make you feel like living? I know what happens when people get drowned with debt, when they get completely encumbered by debt, what that feels like. And it sucks big time. Causes people kill themselves all the time because of this. I had a guy when I was on the radio who was a listener who called in. I told him we couldn't save him. He burned his house down with himself inside of it because of debt. Pieces of paper he owed someone he didn't even know. I mean, there's no reason for that. So if someone needs to hear it from someone who's been through it, tell them to call me. If you know anyone who's experiencing that or who does over the course of time between now and forever, please let me know. I can talk to that person. I can help them understand what options are, even get them to the right people to make sure that they can take care of things. But we should not allow debt to ruin our lives. We're starting to see a lot of this stuff on the medical side. A lot of these collection agencies are also, I could have pulled up a bunch of stories about that too. It's collection agencies that are continuing to collect. There are people who are having their wages garnished right now still for student loan payments that are in default, which was supposed to be stopped. And that was something that the Department of Education said they were going to stop doing, but is still taking place. So if you know someone who's still having their wages garnished on unpaid student loans, they need to contact their payroll provider. Okay, they need to go to their HR, tell their HR to contact their payroll provider and notify them of the situation, that the garnishment should be alleviated, and it will be. So there's a few things right there. There's a lot of messes to clean up when the government starts intervening with things. You know what they really should do? What they really should do, and this is all the government really needs to do in any kind of bailout situation, is just provide finances, just give money. If they did that, it would be so, and even just credit would be better than what they're doing right now. They just gave away, with the new stimulus package, it's going to be almost $3 trillion. And that's before the Federal Reserve got in and put in another $2+ trillion. So we're at $5.5 trillion, give or take. Could be $6. We're $5.5 trillion. If instead of doing that and misappropriating and misspending a bunch of money and a bunch of pork and all this legislation, all this crap, if they would have just given people credit lines. Imagine if we went to a business and said, hey, listen, we can see what your EBITDA is. We know what your revenues are. How about this? We'll give you a credit line for 1 year's worth of revenues. So you do $1 million in sales each year. We're going to give you a credit line for $1 million right over here. And if you need it, use it, 0 interest. You can pay it back over the next 10 years. 0 interest. So you set up a lifeline for the business. Instead of saying, okay, here, we'll give you the money and hope you spend it right, just set it over there and say, if you need to use it, it's here. That would be a so much better way to go, because first of all, we'd probably get most of the money that was lent out paid back. So the government, us, the people, that's who the government's supposed to be, right? Just a culmination of us. They would get most of the money back. So there would be very low or much smaller net loss there. You provide a safety blanket for people who can make decisions with a clear mind. Because when you're a business owner and you're trying to make decisions about what you should do next, but you don't have that safety net anymore, you don't know when the next revenue is coming in, you have no idea what next month or the next month or the next month looks like, you might not make the same confident, smart, wise decision as you would if you had a backup plan or if you had a credit line from the government for $1 million or whatever. So that's what they should do. Instead of trying to make rules, instead of trying to spend the money themselves, they should just create credit lines and give those to the people who have already proven that they know what to do, starting and running a business and hiring people and employing people and providing services. Gosh dang it, if they just did that, we would be in so much better shape. But they keep sticking their hands in stuff and they keep screwing it up. It's driving me nuts. So there's my rants for the day. All right, I'm gonna get back to work. I just wanted you to know what's going on. Mortgage rates are great. VA loans are incredible right now. Our rates are insanely good, especially if you're under 510, 400. Really, really low rates in the high 2s. If you're above that, rates are getting better. So the 510, 400 mark, the high balance stuff, anything that's above that, rates are getting better pretty much every day, like quite a bit. So I'm expecting the disparity between the two to really level off here soon and be in really good shape. But VA rates are incredible. If you know someone who's looking for a VA home loan, whether it's refinance or they're purchasing, feel free to give them my information. I will take care of them. You can count on that. All right, hopefully that was helpful for you. Everybody have a tremendous Friday. TGIF, have a great weekend, and I'll see you.